presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. If you have a question, 877-927-6648. If you do want to see into the future, the only way you can do that is to look into a mirror, because you make your own future. That's the bottom line. Steve Rhodes asked me to talk about a question he had from one of his folks about cycles. And so what I thought I would do is give you a 40-year quick review of what I learned in cycles. Back in 1972, a man named James Hurst wrote a book called The Profit Magic of Stock Transaction Timing, and it became very, very popular. And I put into the Tiger TV one of the charts from that book. It shows how he used centered moving averages and how he started to look at cycles. And the question that Steve had was on the Dow Jones Industrial Average, there are different cycles that are happening all the time. And so what I thought I would do is to give you an idea of where these cycles originate from, in my opinion, of course, and how they develop. Hurst's book was very popular. I think it was only $8.95. It was published by McGraw-Hill, and it became very, very popular. It led to a service called Cyclotech that was run by a man named Ray Frechette, who bought the rights from Jim Hurst. Jim never actually traded. I knew him. He died just a few years ago. He was an engineer. He didn't like trading, but he did like to research the market. And but Ray Frechette had a cycle thing where they would look at the 20 days and the 40-day and the 80-day cycles. These are called nominal cycles. And when these cycles would bottom at the same time, that was a summation cycle. And there was about 5 different tenets that were involved in it. Most of them, I don't believe, were ever proved to be worthy of not worthy, but not really not easy to actually make a case for actual cycles. So what I want to do here is I just want to start with the Dow Jones Industrial Average, and what you're seeing from February through July, you'll see that the market on the 48th day of each of those cycles, the market would crest exactly 48 days, which was in late April. And then again, it crested in early July. It was 48 days. Now, that's a nominal cycle. But if you look at the third cycle, you see there was no crest at that time. The reason why nominal cycles are hard to use is because they usually only work 2 or possibly 3 times at the very most. If you'll remember, I'll try to post the silver a little bit later. Silver had actually 4 nominal cycles, each stopping exactly at the 61% retracement, on its way up into this last rally. That's why when it broke that 33 level in silver, it was breaking the cycle component that had been holding it up. So that's what a 48-day, cycle looks like as a cresting. Now, but people don't look at cycles for cresting. They usually look at cycles, for bottoming. And so what we want to do is to take a look at the Dow Jones Industrial Average, where it stands right now. And since August, we've been making a beautiful 40-day cycle. It came in around August the 10th. Another one came in on August the 4th. And then we had another one come in right around the new moon and solar eclipse of the 25th of November. So now what this means is, if you'll take a look, and I think this is a relatively important chart because this is really how cycles work. If you'll notice when you look at this, the cycle, if it crests on the left side of the cycle, in other words, from the low to the high, that's known as left translation, and that is usually bearish. That means the market will probably make another low. If the cycle crests in the middle of the cycle, that is still bullish, and it means the market could still go higher. Now, the third thing that happens is if the cycle crests on the far right side of the cycle, that is extremely bullish, and that means that any sell-off should be relatively short-lived, And, that's why, it's important to keep an eye on this. Now, what I learned from this is, I was watching these cycle dates, and remember, this was 1970. I went to San Francisco, and I met John Hill there, Peter Elides, Jake Bernstein, Larry Williams. Oh, my gosh, there were so many people there that I can't remember all of them. But, this was long before anybody was doing anything in Fibonacci and looking at retracements and things like that. So all we were looking at were cycle lows and cycle highs and this cresting process known as left translation or right translation. Well, this is how, this cycle works. The problem is it'll only work about 3 times at the very most. Sometimes it'll go out to 4. Very, very seldom will you see it go past, 4 cycles. In other words, 40-day, 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 and that's not, that's not really how it really works. The actual cycles themselves, after I finished that, that part of my study, I used that from 1970 through 1974. I would buy these 16-day and 32-day lows in the commodity markets, and it was so easy because it bottomed every 16 days, and every 32 days it would be a bigger bottom, and you just had to buy it and hold it for 10 days, and you made a lot of money, and that's exactly what happened. But in 1974, when the market started to turn down, that led to the crash of 1974 into October, I didn't realize that once it crested, that it would go down and make far, far lower lows, and I would add to my losing position, and it wasn't long before I gave back everything that I made plus some. But that didn't deter me. I went back to understand what I had done wrong and to try to understand these cycles. So after I finished with the Hearst stuff, I got interested in Edward and Dewey's work, which was from the Foundation for the Study of Cycles, and now by then it was in the the late 70s, and I was already working at Drexel Burnham, and I was long gold and silver and some commodities, and inflation was 16%, so you had to be a blooming idiot to lose money during those years, and it was real easy just to buy something, hold it for 10 days, and it went up. That was pretty much what happened from 1976 through 1981, and then Volcker came in and took care of the interest rate problem, and so I was still interested in the astrology part a little bit, because Dewey had showed me that there's some really important things that are there. So the cycle structure that Hearst had worked on, it looked like it was good because of the nominal cycle, but in fact that is not how cycles actually work. What I'm going to do is to pull a couple of illustrations from the book that I also used, which was the Torque Analysis book by William Garrett. Now, Garrett's book, the Torque Analysis, came out at the same time exactly that Hearst book came out. They were both published by McGraw-Hill. The problem was that the Hearst book was $8.95, and the book by Garrett was $29.95, and so the Garrett book virtually sold very few copies. In fact, Mrs. Clarice Garrett, who I met many years later, 20 years later, told me that her husband only sold 200 copies of the book. The rest of them were destroyed, and so the basic cycle structure, it goes in waves. In other words, we all know what Elliott wave is, or we think we do. And it goes up and down just like we think it does in the ABC equal D format, and that's how things actually work. But in the context of the cycle structure itself, the way things actually move, they move in a Fibonacci relationship. Instead of being a 20-day or 40-day or 60-day, something like that, the markets expand and contract by these Fibonacci numbers. In other words, it expands by 1.27 and 1.618, and it contracts by 618 and 786. And when you look at a nominal cycle, you'll only see it a couple times, and then it'll shift, and you'll say, "What the heck happened? Why doesn't this work, more often?" So this is what led me into the astrology part, starting in the early '80s, and then my teacher, Dr. Ruth Miller, showed me that these relationships that I've posted into the Tiger TV that shows the expansion of 618 to 1.618 to 2.618 to pi, and it shows how these cycles are elliptical in nature. They're not actually circular in nature, that the way that that was taught by Hurst. Garrett said these are elliptical in nature, and these ellipses are the same orbits that the planets go under. Mercury, Venus, they're all under these different elliptical orbits, and they're actually very, very powerful. So what Dr. Miller showed me, she said, well, if this is true and these things actually work, we should go back and look at the major highs and lows in the stock market, and we should find that there should be many opportunities where we have a lot of different cycles coming together at the same time based on these astro planets, and that will give us our lows or highs of what we're looking at. And so we started to do research with the help of Jim Twentyman and Neil Michelson at Astrolab down in San Diego, and he did the tidal things for NASA and also for the U.S. Naval Observatory, and he had all the dates, and we had of the astrology things, and we had the data for the stock market, and so we went back and looked, and we found that all of the bottoms that we've had, the major ones, come within just a few days of these triple conjunctions or quadruple conjunctions, much like we had on March the 9th of, March the 5th of 2009. And there was a huge one back in December of 1974. There was also one in October of 1974, and that led to a double bottom. And then when we started to see this, we just, moved it forward. Then in 1982, on August the 9th, when the market made its final bottom before Reagan had just been in office 2 years, and he said we're going to let the bulls loose, and he certainly did. But on that August 9th date, interest rates had already turned down, and they've been going down for 30 years. That led to the biggest bull market that we've ever had, when the Dow went from 500 to 14,000. So these are very good examples of how some of these things work. And nominal cycles work for you, but remember, they're only going to work for 2 or 3 times at the very most. That's the main thing that you want to realize, that when that happens, you're not going to get more than 2 iterations of it actually working in your favor. What we're doing when we're looking at the cycle theory of the things we're watching, and I think if we take a look at the dollar index, because we have been looking at this for quite some time, and this gives you a perfect example of how the 62-day cycle has been working. Now this is a nominal cycle, and the reason why I put it up is the fact that it has been working, for 2 perfect iterations. We've watched it work together here. I mean, there's I post it 3 times a week, every Monday, Wednesday, and Thursday, and as you can see, we're going to have a commercial. But when we come back, I wanted to walk through this because I really think the dollar is getting ready to pull back a little bit and give a great buying opportunity. So 877-927-6648.
Are your cable rates rising? Tired of being pushed around by your provider? It's time to push back. Cut the cable and get Dish Network installed with absolutely no equipment to buy. Here's the best part. Packages start at just $24.99 a month for an entire year. That's right. Call now and get Dish Network installed free. Plus your choice of HBO, Cinemax, or Stars free for 3 months. If you call in right now, Dish Network will also throw in free HD for life. PMG Dish, a Dish Network authorized retailer, is waiting for your call and can have you watching TV as soon as tomorrow. Call 800-565-8010. Imagine all your favorite movies, sports, and shows in crystal clear digital quality for far less money, and you won't have to deal with the cable company anymore. At only $24.99 per month, they're practically giving it away. Call now for full details. Call 800-565-8010. That's 800-565-8010. Again, 800-565-8010. Limited time offer, prices, packages, and programming subject to change without notice. 24-month agreement required. Cancellation fees, auto pay, and paperless billing and other restrictions apply. Call for details.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks. Now, back to the Futures Hour.
Okay, folks, we're back, and we were talking about the U.S. dollar, and if you go into Tiger TV, you'll see that this thing is cresting on the far right side of the nominal cycle that has been working for 2 consecutive cycles. It's a 62-day cycle, and we're due to crest at that time. So you realize when you're doing the dollar index, the biggest part of that dollar index is going to be the euro. So what we need to do is we need to take a little look at the euro, and if you look at the euro on the daily when you get a chance, you'll see that it has also a 62-day cycle that is due any time now. And it's making a beautiful AB equals CD pattern from the September, late August high down into the early October low. We rallied up to the 61% retracement of the whole move and 786 of the A leg. And now we're getting ready to bottom somewhere around this 28.21. And we're 100 pips away from where we are now, and realize we're almost 100 pips away on the U.S. dollar, topping at around 81.90. Now, I'm bringing these to your attention because these are technical things that people look at, and I'm trying to describe the relationship of how these cycles work, and so that'll give you an idea. We are going to follow through with this. I do believe the euro is going to go a lot lower in 2012, but it wouldn't be surprised because it's so overbought. So oversold that we should get a pretty good correction, to the upside. In other words, the dollar should sell off a little bit, and the euro should rally. So that's what we're looking for. We got a call from John in Philadelphia. Are you there, John?
Hello, Larry.
Hi. How are you? Happy New Year to you, my friend.
Hey, same to you, Larry. Larry, you wanted to get an update from you. Back last November, I remember you were pointing out the cattle monthly chart. There was a beautiful butterfly topping pattern, potentially. For what it's worth, I took the short at 124. That was basis of D's cattle. It quickly fell to like 119. I grabbed some cash at 120, and I've been flat since. Now February is the lead contract up near 123. I'm just wondering what the subsequent action has told you, if anything, about whether this market is topping in a good short.
Well, I put into the Tiger TV so you could take a look at it that we completed a beautiful bullish Gartley pattern down at that 117 per pound level in the cattle, and we rallied up to almost to a double top at 124. This still looks bullish, John, because all the lows are higher than previous lows. And, there's a lot of resistance up here, of course, at this 125 level in the cattle. But right now, I'd prefer to be a buyer if it backed off into this 119 level because it looks very strong, long term. And this last correction we had was equal to the correction that we had back in July. And so it stopped exactly where it should have, right at 117. As a matter of fact, if you looked at the bond chart, this would be pretty close to what the bond chart has done. And there's no correlation between bonds and cattle. I can almost assure you that. But that's what it looks like to me, is that if it can back off into this 119 level, it looks pretty good.
Great. Well, listen, thanks so much. I appreciate it.
You bet. And thanks I hope to see you when I get to Philly this winter. And Happy New Year to you. I
I'm looking forward to it. Bye now.
You bet. This is the commodity hour, and I think I finished the cycle part that I wanted to cover. The reason why I use the astrology things is because they're based on these elliptical movements that we have. All of them are related to mathematics. There's nothing mysterious about it. They're just based on these numbers of sacred geometry, of which the Fibonacci summation sequence is part of. And all I do is to try to take these patterns that I see, these ABCDs, butterflies, and Gartleys, and 3-drive patterns, and line them up with time where we have some astrological things occurring, and that's why I come up with some of the predictions. But like it says, if you want to see the future, folks, the only way you can see the future is to look in the mirror, because you make your own future. Nobody else makes it for you. That much I feel pretty strongly about. So the big thing that's happening now in the commodity markets is that we've had a tremendous move off these bottoms of the 618 level in the major growing commodities, the ones that we watch the most, and that is the sugar, not sugar so much. Well, sugar is one of them, of course. Well, we've got to take a quick little break here, and then we're going to cover some commodities, because we've got to be ready to buy some of these things right after the first of the year, folks. 877-927-6648.
This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2 week free test drive right here, right now.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we thought we'd take a look at silver and gold because they're a big component of the the futures markets, because many people trade them. They're not trading them now because the volume is just really, really small. This sell-off in gold and silver has been accompanied by some of the weakest volume that we've seen in a long time, and I think Tom and Steve pointed it out with some of the gold stocks, how they're holding up so well. And so if we can get gold down another, we're only $80 away from the target. That's just 2 days if it gets crazy, down around that 1440 level, which would be the 786 off of the January low. Remember, we hit the exact 618 at 1534, back in September. Then we rallied up to the 707, which is the reciprocal of the square root of 2, which has to do with electricity, as we know from Dr. Al Larson's book, Your Electric Life, and that would set up a expansion down to the 1440 level. That would get silver down to about probably the $24 level. Silver has taken out the low from last September a little bit, as has gold. Now, whether it stops here or not, I don't know. I've looked at all different kinds of cycles in gold. I can't find any, but I did put one into Tiger TV on the silver that we had followed several times, and as you can see, it had 2 iterations. In other words, that nominal cycle, worked twice, and then, after that it failed. Now, when I put stops in on markets, I try to use a dollar amount, but it's based on these numbers of the Fibonacci summation sequence. And so what I try to do is, like when silver went below 33, it was breaking the 618 retracement for the first time in a long time, and that told us that, it's most probably going to go a lot lower. That was the same thing, when gold, after it rallied up to 1825 on that rally, we got to, the point that once it broke below 1675, it told us it had a potential, to break, a lot lower. That's just a normal cycle phenomenon of, holding up against these numbers. And I'm only basically looking at the 4 numbers, retracement numbers of 618 and 786, and expansion numbers of 1.27 and 1.618. So we have to take a look at gold if we get it down here to this 1440 level, especially because it's been the time of the year is right. It's just very low volume. The open interest is still very poor in the gold and silver, folks. There's nobody coming into the market to play. The first time that we get a good move and we get good open interest behind it, in other words, players coming into the market, then they will be able to, to pick a spot, to where we want to look at this. But these are the things that, we have in our radar for, 2012. And we have to keep a really close eye out on all the grains, especially the corn and the wheat and the soybeans. They've done beautiful retracements in soybeans, which is one of the more, it is probably the world's most perfect food. Has just made a perfect 61% retracement off of the low from 2009, and so we're in an area now. We want to be looking, if the soybeans back off, which they usually do, nothing goes up forever, that it'll pull back, about 40 or 50 cents from here, and it'll give us a chance to look at it. And that's one of the things that we're going to look at very closely. Well, this is the last show of the year, so I think I had really better go over the Treasury bonds one more time, because this is the one that I think is going to be the one that is that has the potential. I don't know if it's going to be exactly what I think it's going to be, but it has the potential to be the big daddy rat, as they say in the hunting trade. And we have to pay a few bills here from Mr. O'Brien. God bless him. 877-927-6648.
Give the gift of silver. This holiday season, TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and we're talking about the Treasury bond market, and I posted into the Tiger TV the long-term 30-year chart that shows the big channel that it's been happening since interest rates have been dropping since October of 1981, and I believe we're getting close to having a pretty good increase in interest rates relatively soon. Remember, in 2009, the market dropped $25,000 in bonds. That was our trade of the year for 2009 into January of that year, and it worked out relatively well. And so what we're looking for is possibly a repeat of that, and we will find out, relatively soon if we're going to be filled. We're still waiting for the TBT to come down to the $16.80 per share. That's the ETF for the Treasury bonds. We're waiting for the March Treasury bonds to get up to that 149 to 150 level, and that's not very far away. That's just 5 or 6 points, and 5 or 6 points in bonds is, that's just a matter of one little flight to quality or safe haven story, and you could be there very, very quickly. So we want to be patient. We've been holding it up for quite a while, and that's really what we're looking at. And so just keep the orders working. If you have an interest in getting short the Treasury bonds, you don't have to risk a whole lot. I'm using a $3 stop in the TBT, but frankly, we'll be doing the futures, and we'll be probably using somewhere around a 2 or 3 point stop, depending on the volatility of the bond market should we get up into that area. The ideal time for this to happen would be right around either January the 9th, I believe, which is the full moon, or the next, when we start the Chinese New Year, which is on the 22nd. We have a new moon on the 23rd of January. So the 9th and the 23rd is what we're looking for. Now, these are not nominal cycles, folks. These are natural cycles. And as we've seen in the stock market, and Steve has pointed out, time and time again, these cycles really do work. I mean, they've been topping and bottoming. And, the work that Tom Pelk did at the Royal Bank of Scotland, he's now with Nomura Securities in London, but he went back and looked at 88 years, and the probabilities of it working, are extremely high. And so this is why we watch these cycles, and they don't change much. Well, they don't change at all because you can measure them down to the second. So this we're trying to do is to put a pattern together with the cycle, and then find out, where we are at that particular point. I had a question about the sugar, because sugar has attempted to hold this 786 level at $22.83 a pound now for the past month, and it has still held that level. It had a really strong 8-day rally that it moved over $1,000 per contract, and then it came back and touched the 2283 level again, in a sense, bounced up another $500 from there, which gives us an indication that there's a really strong support in the sugar at this 2283 level, and sugar is a very actively traded commodity. It's known as a soft. The softs are sugar, coffee, cocoa, things like that they trade out of New York. They're all electronic now. There are no more pits, but they do trade. They have plenty of volume to go with it, and it does have a pretty good pattern, for the long side. So that's what we're keeping an eye. But nothing compares to the pattern that we have in the bonds, folks. I don't want to get on my high horse too much, because I get knocked off too many times. But the pattern in the bonds is mother, God, and country. I mean, it's got everything that you could possibly ask for. It's got the cycles. It's got the long-term implications of people using credit cards, to finance their cars and just about everything else. And that's what we're looking for. But we need to get the TBT down another 1.5, which is not very much. I mean, this thing is had huge runs before, so 1.5 in the TBT is very, very small amount. And there'll be, at that point, if we do get to that level, we're going to have a very nice butterfly pattern forming, and that'll mean that the bonds will be up into that 150 level, and that's really what we're hoping for. This is the kind of trade that you'd like to see. Give me 100 of these, and I will win on more than 80 of those. And the ones that I lose on will be relatively, small losses, because it's got everything set up to work. Maybe we're going to have zero interest rates forever, and maybe the credit card people are going to drop the rates from 29% or 17% or 8%, whatever you're paying. Maybe they're going to drop it down to a small level, which, if you still believe in Santa Claus, his sleigh left back for the North Pole on the 25th late in the evening. So that's not going to happen. The cycle's there. Everything is, we're just trying to be patient to see if we can, enter the trade. When we get there, I will almost assure you that it's going to be difficult for a lot of you to pull the trigger, because it looks like interest rates will be going to zero. That's typical how markets do these things, whether it's crude oil at $10 a barrel, or the euro at 160, or bonds at 147, whatever it happens to be. These are the times when it's most difficult to do it. But we're looking at numbers. We're looking at the cycles of these numbers, and that's what we're trying to to narrow it down, so we don't have to risk very much, and know that the probability on the trade is going to work far better than it's going to not work. And that's the whole principle of what we're looking at with the bond trade. I follow it every day. I talk about it each day, because I know we're getting closer and closer to it. and we'll see if this is going to be the trade like we think it's going to be. And I wanted to go back and to touch on the cycles again, because there happens to be another cycle in commodities that we've looked at several times here, and that is the lumber cycle. I haven't traded lumber in more than 12 years, so I don't trade lumber, but the cycles of lumber are good. The patterns are very good, and it's had two one-year cycles. This is a nominal cycle in lumber. It's 52 weeks long or 356 days. Anyway, we have a little break here, and we'll come back and wind up the show for the rest of this year. 877-927-6648.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before December 31st from your local Barnes & Noble store. And you will be given access to not just one, but two exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you have until December 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. How would you like the strategies that Kennedy's and others use that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will astonish you. I'd love to introduce you to these concepts because they will absolutely change your life. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien and host of The Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then send me an email at steve@tfnn.com and I'll send you this free report, Pathways to Wealth. That's steve@tfnn.com, giving you Pathways to Wealth.
Go long, America! Purchase Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Before December 31st, you will receive in excess of $300 in trading education. Now, back to the Futures Hour.
Okay, we're back, and we have a call from Richard in Colorado. Are you there, Richard?
I am. How are you?
Very good, thank you.
Yeah, I had
what can I help you with?
Last Thursday, you showed a chart of the Bradley model versus the Dow, and I'm trying to understand how to interpret it as we go forward into the April 2012 time frame. Is each maximum representing an increase in the Dow?
Well, it doesn't. What it really does is it determines trend for a short period of time is the basic thing. If you look at it over a long period of time, 1 year, it'll give you a bias whether you should be long stocks or not. I think it had showed, I went back and showed over the last 4 years that it did a better than 75% idea of where the stocks were going to go for the year. But what we try to do for the Bradley model is to take the point where it's cresting and to see if we can get a Bradley date. And a Bradley date is where you have, several strong indicators, planetary things coming together. We had one on, November the 25th. That was a Bradley date. We had another one that just occurred here on the 28th, which was yesterday. And so that tells us that we should have a downward bias for the first week or so into January. And then after that, we should have the January effect kick in somewhere around the either the full moon of the 9th or the new moon of the 23rd. That's basically what I try to do. It's a rough guideline, Richard, and that's the only way I can use it. I've looked at it for, going back to 1866, and that's the best way to use the Bradley model.
All right, appreciate it.
Okay. The thing to look at is, if you add it with the patterns, it gives you a great deal of, an idea of where things are going. Because, when the Dow Jones made that high that we made just the other day, it was at the exact, 786 retracement. And so, because the market was going up into that, we assumed that the market is cresting. And so, if you inverted the Bradley model, you'll see that. It's actually done a pretty good job of calling the bottom from, the bottom on the day after Thanksgiving, the 25th, that was a no-brainer. That was the solar eclipse and new moon, and then we had the full moon where the market backed off a little bit, and then we've had this other one that we're having right now, this new moon on the 25th. The 24th, the market did nothing, and then on the 28th it started to come down. So I'm expecting the market to come down into either the 9th or the 23rd. That's what my assumption is going to be. It still looks bullish to me because of the way the commodities are acting and crude oil. We don't have the same situation yet like we had in 2008. So all I'm waiting for is the bond trade. To me, I think that's the. I wake up thinking about bonds. I think about them all day long, and I think about them when I go to sleep at night.
Well, I appreciate all the updates and the information. Thanks.
Well, thank you very much, and I want to wish you a very happy New Year, because we'll have a good year, I think, in 2012. It has a bearish bias, I think, Richard, on a longer term, but we're probably going to have volatility. Like we'll probably scare the life out of me and Tom and Steve and everybody else and Basil, because we are going to see some wild swings that we haven't seen in quite some time.
And January 9th and the 23rd, you said you were expecting the market to, did you say bottom?
Yeah, I think we're going to see a bottom on either the full moon of January the 9th. They're both on a Monday. And then the Chinese New Year starts on the next new moon, which is on the 23rd. And so that's what I'm looking at. And then after that, we're going to February, and then we'll see where we stand. But right now, we've had a pretty good run here, and we're just, having a minor sell-off. That's all it is.
All right.
Okay, Happy New Year to you, Richard, and I want to wish everybody at TFNN Happy New Year, all the subscribers and everybody and listeners, and especially our leader, Tom O'Brien.